Good morning, good afternoon, good evening, wherever you are. Thank you for joining us for today's public webinar. Hope you all are doing well. Good morning, Jim.
Good morning. Good morning. We'll start off with a brief commercial. The reason we do these free webinars is to draw attention to our educational programs. Our small program starts next Wednesday, December 6th, and it is the primer. It is a total of 8 days. The first 4 days are linear to get you, introduction to value and some of the references. The last 4 days are live with the markets, combined with my providing comments throughout the day as to what I see in the market. This gives you a chance to really take a look at what we do and see if it feels right for you. Jen just put up the schedule. You can see the course, you can see the outline there. Okay, and we'll come back to that a little bit later, but that's the reason we do this. You can go to our website and look at it in more detail. Jen, any comments before we go to the markets?
No, I think we're fine. Like I said, we'll go over this a little bit later for those that are interested. I'll give you the screen.
Thank you.
Okay. There you go.
Okay, so one more time, we've got very big enthusiasm again this morning. Take a look. This is the settle from last night. Overnight inventory is 100% long. We've talked about this continually. About 70% of the time, there is a counter auction or a correction relative to overnight inventory. If overnight inventory is long as it is today, and there is not a counter auction or a correction, that's usually a sign of a pretty strong day in front of us. Let's take a look at yesterday. We came into yesterday. Here's overnight. The settle was right in here. So the overnight inventory was short yesterday. And you can see short-term traders are just chasing the market down, following price. And of course, then the market opens and you see the market works its way higher, all day long. It got up here just short of the old high, came back, you got some liquidation. This is kind of a B shape. When you see this shows you when it sells off from here. Your question is, was it real selling or was it just liquidation? And when you get this, when the market comes down sharply and then you move sideways for about 2.5 to 3 hours, that is liquidation. It's not a combination of liquidation and new money selling. And that's what you're looking for to see if there was new money selling. So overnight inventory was short, market at a counter auction, the market went up. Today, as we come in today, we've got overnight inventory. It's 100% long. And the question is going to be, do we get a counter auction? Support is going to be at the old high, the most recent high right along here, and that is going to be at the 45.80 level. It's a little bit higher, but I'm just using 45.80. So the market, and additionally, the market as of right now would gap higher. So we have a higher gap opening. The gap trading guidelines are applicable, and the gap trading lines are as follows. Go with any gap that's not filled fairly quickly. And I can't give you a perfect definition of what fairly quickly is. The best buying opportunity on a lower gap, on a higher gap, is when the market sells off, attempts to fill the gap, and tempo, which is speed, and volume, slow. So that's what we're dealing with this morning. We look at the bonds. The bonds are yields are down again this morning. Yields are down again this morning. Yesterday, is triggering off of of Fed comments. At least that's what it looked like. It was Fed comments in there. So this is what we're dealing with this morning. Now, keep in mind, you've got the most important number of the week tomorrow, and that is PCE. The underlying structure of this market is terrible. The market sees no risk in here whatsoever. That is usually a dangerous position. I want to show you a bar chart. You'll see, here's a pattern right here. The market goes straight up, and this is usually not a very good sign. This is weak buying. Then you see you get the liquidation. Here you have it going down, and you get the rally. Here you have the same thing going up. And this is just, when you see this, it's just mechanical. It's mechanical buying all the way. Traders are buying right on the trend line, very mechanical. This is not an indication. When you see this, this is not long-term or investment money. This is short-term trading money. This is short-term trading money. We've got the same thing right here. Mechanical buying right on the trend line. So they're not always going to lose, but if you take a look at how often the market does correct, your risk in here is extremely high. So this market is, everybody is sitting there blindly buying the year-end rally, mechanically buying any little dip in the market. And what you don't know, sometimes it takes a catalyst to break this, but this is a dangerous situation. Now, there's two types. If you understand what's going on and you know how to protect yourself and you keep tight stops in here, this is tradable. The people that get hurt are the people that don't understand how much risk they're taking. They get in here, they don't realize how much risk they're taking. Those are the people that get hurt in here. As long as you understand this is what the market's doing, and you understand it's just trading, it's not investment money, and they're going to do this, as long as they can get away with it. Traders do what works till it doesn't work anymore. So those that understand what's going on, they can do just fine. Those that blindly just buying because price is going higher and are unaware of this risk, that is a whole different category. Okay, so let's go back. And as you can see, we've got mechanical low right here, right at the settle. Overnight inventory is long. We're going to open in about 20 minutes, and our support is going to be right at the 45.80 level. Okay, let me take a couple of questions, and then Jen's going to do another commercial.
Is there a reason why the trend lines on the daily chart that you drew going down are on the lows? Shouldn't they be drawn on the highs?
I just look at it. I'm not a trend line person. I'm just drawing. I'm saying this is going down, and I'm just looking to see what are traders doing. They're buying right on the line. That's all. They're buying right on the line. So, I'm not a trend line person. It's just how I look at the markets. Okay, what else?
Okay. Would you treat yesterday as a look below a 3 to 4 day balance and fail?
I think it's a little more complicated than that. If you take a look, and I'll move this over a little bit. This is a holiday, no excess on the high, couple of ticks, no excess on the high. What happened? So many times you'll find that these holiday highs are retraced. There was no excess up here. The market just kind of fell on its own, on its own weight. You had no excess on the lows either. So I think the market just went up. This had to be corrected. It didn't have to be corrected, but there was no excess. And I think that's what we dealt with yesterday. I think the market overnight short, I think it got started with the market being short overnight. And then the market went back up, and you never had any real excess on these highs. I think more than anything else, that's what was going on yesterday. Okay, what else? Two more questions and then we'll do a commercial.
Somebody's asking, do you think today could be a look above and fail that could happen today?
Yeah, but you know, this magic of look below and fail, look above and fail, that's people looking for a, you know, one-step answer. And that'll get you in a lot of trouble. It's magic, and it's an easy answer, but you have to look and see what is the market doing? For example, you know, where are we this morning? Overnight inventory is long. Okay, so the first thing we look at, the odds are high that we get a counter auction to overnight inventory. Then we look to see when that overnight inventory, does it get down below the previous high? Then does it get into yesterday's range? Does it get to half back? The real thing in here is the monitoring for continuation. It's not look above and fail, look below and fail. That's a nice, simple answer. But the key is learning how to monitor for continuation. So if the market holds around this 45.80 level, okay, value is going to be higher. We get back below that, then we're looking into yesterday's range. So again, it's monitoring for continuation. Okay, one more question and then we'll go to commercial.
Okay. Are you giving any importance to yesterday's poor low, or are you going to ignore it for now since the market is gapping higher?
It's one data point. It's one data point. And the thing is, what you're doing is carrying that information forward. Now, so right now I'm not paying any attention to it, but if this market starts to break and you get some real selling in here, you get back into yesterday's range, then I will go and I will focus on the point of control from yesterday. I'll focus on the poor low yesterday. I'll focus on the settle. So much is, you know, is so much once the market gets going, how do you monitor for continuation? Okay, Jen, do a commercial, then we'll come back and take a few more questions.
Okay. 1 second. Let me take the screen back. Okay, so just as we mentioned earlier, the live market profile primer starts next week on December 6th and runs through December 14th. This is a great class to take if you're somebody who's new to market profile, or maybe you have some knowledge already, but you want to make sure that you understand the concepts as intended by Jim, or you're somebody who is just looking for a great refresher. Also, a lot of times I get comments from folks that, you know, they hear the questions that other people ask and they're like, I remember when that was me. So great to always review the basics. That's for the first 4 days. I should also mention that on the fourth day, if you're somebody who doesn't have market profile charts, that's not a problem. We actually will be going over an exercise on the fourth day as to how to plot the profile manually, or as I like to say, semi-manually using Excel. And then the latter 4 days, Jim will be narrating the markets so you can get an understanding of how all the pieces come together and how he's making adjustments and analyzing things in context and everything. So, and we'll also provide daily reports and live commentary those latter 4 days when we are not in a live webinar. So it's a good overall value. Great way to come check us out to see if you like how we look at the markets, how we learn to observe the markets the way we do. And for all the above reasons. If you have any questions about what's right for you, by all means, you can shoot us an email at dalton@jimdaltontrading.com or give us a call at the number down here, and I'd be happy to speak with you. You can see a bit of an outline that we have here on the detail page for the primer. The schedule, as I had clicked on that earlier, so you can download this and see all the timings of the webinars. You do not have to have market profile charts in order to take this class. All of the webinars are recorded, and you will have access access to materials for 3 months after the course finishes, so that you have time to review. And something that wasn't done before is that WindowTrader is offering a WindowTrader Blue free trial for the month of December for our class. There are a couple of eligibility requirements, and that is that you must be a new subscriber, never subscribed to WindowTrader before, as well as be enrolled in the primer. Okay, Jim, I'll give you back the screen.
Please.
and we'll take a few questions. 1 second. There you go.
Okay, let me get my screen up. Okay, let me just point out again, because we haven't opened yet, but look at yesterday morning, overnight inventory is short. Traders are just blindly following price. And of course, we say overnight inventory, there's a good chance that you get a counter auction. This morning, we've got traders blindly following price all night long. Maybe it works, maybe it doesn't. Remember, about 70% of the time, it doesn't. If it does, if we hold the gap and we don't get back below the 45.80 level, you get good odds of a pretty strong day. But remember, overnight inventory is long. Be very careful. Okay? Questions, Jen?
Okay. Do you consider the strength or weakness of the US dollar?
No, I don't. You know, sometimes when it gets to be excessive, I will. And the reason it's sometimes a strong dollar can sometimes put additional pressure on, multinational companies. But I do look at gold, and I'm looking at gold. Gold, fought at $2,000 level for a long time, but it has got my attention that gold has, now up in the 2060 level. So that's a questionable area that I have kept my eye on. Also, remember, there's an oil meeting coming up, and who knows what that may bring. Okay, other questions?
Okay. Volume has been light since the holiday week. Is that concerning to you for liquidation follow through?
Volume has been just terrible, and I think what's going on, I find that, remember, I showed you the structure going up, and I said it's okay to trade that structure as long as you understand if it comes apart, it can come apart very, very rapidly. So you got two people. Those that understand it can trade it. Those that don't understand it are taking a lot of risk. And I think that the question on the volume, I don't see any participation of longer term money in here. I see the longer term money just being complacent. I don't see them out there buying. I don't see them out there selling. They'd like the market, their year, for all practical purposes, their year is over. You're coming into, next week starts December. You start getting the books closed a bit. And at this point in time, either they had a good year or a bad year. And I think they just as soon get the year over with. The short-term traders seem to be very active in here. That, to me, is a risk concern. Short-term traders, they keep reading about a year-end rally. And that's what the money's been doing for a long time in here. There was an article the other day, the strongest, November, and I forget how long. Well, that's strong, and they did that. I think it was up 8.5% or something. That's based on price. When I look at that, and I based on structure, it is I get a totally different picture. I'm not going to fight the price, but when I see that, I said it's a high risk market in here if something goes wrong. And that's why tomorrow's PCE, I think, is going to be a very important number. Okay, what else?
Okay. Is it relevant that today's overnight high is exactly at the gap high, which also happens to be the August 1st low?
Yeah, because traders have a tendency to go to references they can see. Just as, it's set here at look at this 45.80. It's set right there for forever. Nice mechanical reference. Then it finally went through. I mean, it's just what traders don't do a lot of thought. They go into what they can see, and you can see a gap high. You can see a monthly high or low. You can see that, this 80. So I think that is relevant. Okay. Final question or two.
Okay. Somebody mentioned that the UAE removed the US dollar as a currency for oil. Any comments with regards to that?
No. I mean, like I said, what's important is When I look at the market, I look at the market and monitor the market for continuation. As a short-term trader, if you're, your question, if you're an investor, that's maybe one consideration. As a short-term trader, so much of short-term trading has to do with inventory getting too long, too short. For example, yesterday, inventory got too long. Then you got a liquidation break. As that liquidation break, they got the inventory short. So much of short-term trading has to do with inventory gets too long, gets too short. A lot of these traders down in here, they know nothing about the dollar or, UAE or anything else. They're traders. They're traders. They don't go in a lot of depth. You see how much time they trade to these exact levels in here. So I guess it takes a realization to understand what are you dealing with. I don't see any evidence in here that the longer term money, as I said, I think they're very complacent. Just let the market, they'll just pray that the market keeps going up for the rest of the year. But it's late in December. They've either had a good year or a bad year. And, the chances are they don't want to make it any worse at this point in time. Okay, 2 more questions.
Okay, do you see a relationship with the DAX or what happens in the equities in Europe with the SP 500?
Not necessarily. That's the kind of stuff that will give you a headache. And when you start, in my opinion, as a short-term trader, when you start looking at too many other things to see what this market's going to do, that generally will lead to cognitive dissonance in there. And traders have a tendency to look at too much. And what is important is to look at the most important information, but not too much. There's no indication that more information is better. It's the right information. And I think what's going on right here, I think the most relevant thing is inventory. Short-term trading is so much about inventory. Well, first of all, it's about trend. The trend, while I don't like the market, the way it's going up, and I think there's a tremendous amount of weakness in the market, don't fight the trend. The trend is up. The trend is up, and that's what a lot of short-term traders see, and that's what they're gonna follow. So you don't fight the trend. If you're gonna go counter to the trend, you better be right, and you better be right very quickly. Okay, final question.
Okay. Today will be the 5th gap since the market rallied from 41.20. Is it becoming excessive? If so, how do you carry that information forward without focusing on it too much?
Yes, may I answer your question. Yes, I think it's a sign that the market is very emotional, very dangerous, but a lot of times it takes a catalyst. And the important thing is you're a short-term trader, is to trade what is in front of you today. Then if the market starts to break down, then you start to bring that information back into play. Most important thing is do not fight the trend. Okay, thank you much. I wish you have a great day. Bye now.
Thank you, everybody.